T 8.1.3. MN Limited is commencing a new project for manufacture of electric toys. The following cost information has been ascertained for annual production of 60,000 units at full capacity. Raw material, direct labor, manufacturing overhead, selling and distribution overhead. Total cost is 64, profit is 16 and selling price is 80. In the first year of operations, expected production and sales are 40,000 units and 35,000 units. So 40,000 will be produced and 35,000 units will be sold, and it is commencing production. So there will be no question of opening stock. To assess the need of working capital, the following additional information is available. Stock of raw material 3 months consumption, credit allowable for debtors half month, credit allowable by creditor 4 months, lag in payment of wages 1 month, lag in payment of overhead half month, cash in hand in bank is expected to be 60,000. Provision for contingencies is required at 10% of working capital requirement, including that provision. Prepare a projected statement of working capital requirement for the first year of operations. Debtors are taken at cost. All right. We will be finding out working capital requirement. Let's start with raw material. How many units will be manufactured? Units will be manufactured is 40,000. Even if units sold are 35,000, manufactured will be 40,000. What is stock of raw material? 3 months consumption into 3 divided by 12. This will be nothing but raw material stock at the end of the period. At the beginning of the period, there is no stock. 40,000 into 3 divided by 12, which is 10,000 units or kgs. Units. 40,000 units of raw material for that toy will be purchased per annum. In your stock, you are keeping 3 months stock, so you will be on an average keeping 10,000 units. Let me open an Excel sheet so that my calculation becomes somewhat simple. Raw material stock is 10,000 units. What will be rate applicable for raw material? Rate applicable for raw material is rate for raw material, which is 20. And so raw material stock will be 20,000, 2 lakhs rupees. Let us go to WIP stock. WIP stock how I will find out? WIP stock is not available, right? The stock of raw material is available, so there will be no WIP. Let us go to finished goods. Finished goods is interesting over here. Try to concentrate. How to find out a number of goods lying in closing stock? Of course, there is no opening stock because this is commencing of business. So how to find out finished goods units is very simple. 40,000 minus 35,000. In current year, this is produced. Opening was 0. This is sold. This will be finished good stock, which is 5,000 units. I can fill up 5,000 units over here. What will be cost of that production? Please understand. 500, 5,000. For finished goods, we should not consider this manufacturing, selling and distribution overhead. Other all costs, including raw material, including their labor, including manufacturing overhead should be considered. So total cost is 64. If we reduce 4 rupees, it will be 60 rupees. So finished goods stock is worth 60 rupees. I will be getting finished goods stock of 3 lakhs rupees. Let us go to debtors. It is clearly written debtors are to be taken at cost. Debtors are allowed 1.5 months period. How many units will be sold? 35,000 units is for 12 months. What will be for 1.5 month? That will be 35,000 into 1.5 divided by 12, which is 4375 units. 4375 units debtors will always be there in our business. 4375. Here we should include this 4 rupees. So total will be taking 64. Will not be taking profit because it is specifically given data should be taken at cost. We can take this as 64. I will be getting answer for cash and bank. I think directly figure is given. Cash and in bank is expected to be 60,000. Let us go to creditors. How many units of toys will be purchasing? Will we be purchasing 40,000 raw material? Yes, in current year we are going to purchase 40,000 raw material. So creditors will be for 40,000 units. What is credit period allowed? 4 months into 4 divided by 12. This will be units purchased which will be lying in creditors. 40,000 into 4 divided by 12, which is 13,333. And what rate should be multiplied with this 13,333? Should be purchase price of raw material. What is purchase price of raw material is 20. So rate applicable will be 20. This will be my creditors. What I will be doing, how I will be finding out my working capital requirement is current assets minus current liability, and then I will be doing something for contingencies. Before taking rate, let us consider one excellent point. First, let me write down rate over here. Which is raw material purchase rate. Let us consider that excellent point. The stock 13,333, which we have calculated over here, is not correct. Try to concentrate. In opening, what were total raw materials? Stock 0. During the year, how many toys we have manufactured? So we have purchased 40,000 units of raw material for manufacturing that 40,000 toys. But please understand, we know that closing balance of raw material stock is 10,000 units. Here it is. Closing stock of raw material is 10,000. So understand, if we want to manufacture toys of 40,000 and we want to keep a stock of 10,000 raw material, we will total have to purchase 50,000 units of raw material in current year. Next year this will not happen. Why? Next year opening stock will be also 10,000, closing stock will be also 10,000. So whatever you are manufacturing, you will have to purchase. But in first year, opening stock is 0. You want to manufacture 40,000 units, so you need 40,000 units of raw material. And you will require additional 10,000 units of raw material to pile up your stock. So you will be purchasing 50,000 units of raw material. What is the credit period? 4 months into 4 divided by 12. What is the answer? 50,000 into 4 divided by 12. Excellent point. 16,000 667 units. This answer will be in units because this answer is also in units. We'll be putting it in our Excel sheet 16,667 instead of 13,333. 16,667. This will be creditors. Let us go for wages. Now this is a new point, first time we are doing it, but try to understand outstanding wages are same as creditors as far as working capital requirement calculation is concerned. Because if your wages are outstanding means you are delaying your payment. Delaying your payment will always reduce your working capital requirement. So wages payable, I will be directly finding it out. Wages will be paid for how many units? Now in wages there are no closing stock. So wages will be paid for 40,000 units. Will be paid for 40,000 units. What is cost of wages? Now I should take only wages figure, which is 15. This is wage cost per annum. How many months wages are outstanding? Wages will be outstanding for 1 month into 1 divided by 12. Because this is per annum figure, we need to do into 1 divided by 12. This is 40,000 into 15, which is 50,000 rupees. Now this answer is in rupees. We have already multiplied the rate. So 50,000 rupees will be outstanding wages. Wages payable will be 50,000 rupees. Then let us go to manufacturing overhead payable. Again, manufacturing cost will be levied for 40,000 units. What is manufacturing cost? 25. What is manufacturing lag? Overhead lag is half month. This will be 40,000 into 25 into 0.5 divided by 12, which is 41,667 rupees. 41,667 rupees. Manufacturing overhead payable. Now try to understand, this is lag in payment of overhead. What does it mean? It is applicable to manufacturing also, it is applicable to selling also. So let us find out outstanding selling overhead. How I will find out? I am manufacturing 40,000 units, yes, but I am selling only 35,000 units. Selling overhead will be applicable for only selling into 4 into 0.5 divided by 12, because a lag is for both the case half a month. 35,000 into 4 into 0.5 divided by 12. That's a mistake. 35,000 into 4 into 0.5 divided by 5833 will be manufacturing overhead outstanding. Sorry, selling and distribution overhead outstanding 5833. So I've got my answer of current assets, I've got my answer of current liability. What I can do is, let me first write down current assets 8,40,000 minus current liability 4,30,840. So my net working capital will be 8,40,000 minus 4,30,840. which is 4,09,160. 4,09,160. This will be my net working capital. Now understand the concept of contingencies. Provision for contingencies is required at 10% of working capital. Then my answer would have been simple. Plus provision of 10%. But it is something else. Understand. 10% of working capital requirement, including that provision. So what does this mean? If I add this, this will be my total working capital requirement. And what they are saying is this provision should be 10% of this figure and not of this figure. 10% provision including that provision. How to do it? Mathematically it is very simple. Concentrate. I will assume this as 100. So this will be 10. So this will be 90. Just do the cross multiplication. I will be getting the answer. It is 4,09,160 multiplied by 10 divided by 90. 45,462. 45,462. And so my total working capital requirement will be 4,09,160 plus 45,462, which is 454,622. And you can see this is a 10% of this figure. And so our answer is correct. This is nothing but our total working capital requirement. What is good point? Excellent point is this. Creditors. Why creditors? If you want to manufacture 40,000 units and if you want to keep a raw material stock of 10,000 units, as this is your first year or your opening stock of raw material is 0, you will have to purchase raw material worth rupees 50,000, worth units 50,000 and not of 40,000 units. This was excellent point as far as 8.1.3 is concerned.